Okay, good morning and welcome every single one of you guys. Welcome to a special edition of Pounds for Breakfast, and we're changing things up this week, right? Listening to the requests that we made yesterday and your votes, we decided to do things a little bit differently moving forward, right? And what we're going to do is we're going to keep set structures for our set shows, but we all are going to now have these special edition shows for high impact news events, right? So if we have a high impact, as example today, some of the employment data coming out for the pound, we will do a separate show just for that, to cover that. But we will then keep to our set schedule of covering Pounds for Breakfast at 10:15, and then looking at the New York Stock Exchange at 4:15 in the afternoon for that 4:30 move. Everything over and above that, we will do these special edition shows, which we will add tabs in your back office, which we obviously haven't had and added yet. And that is why I've obviously sent out that link for free. So for those of you who have your Globex 360 live accounts, you will then be in a position to go into your back office, access all of the special events. So before the message even gets sent out on the day, you will have links to all of those sessions available to you. Now, again, this is one step closer to moving forward and towards our 24-hour streaming sessions, right? We're filling in those gaps. We are training other presenters as we speak right? As we speak, I'm currently busy training alternatives to come in and cover different things, to cover news, to cover crypto, cover commodities, stock markets, local as well, and so much more. Do news interviews with politicians and decision makers who have an impact on the market. So I cannot wait. We're about to take things to a whole new level, and we are just getting started. I was up until around about 10 o'clock last night. From the time we ended that broadcast, sorting out the audio issues, and I finally found the issue, and it was something so silly. I ended up rewiring most of the studio just to try and find the bug, but it ended up being a piece of software. So I trust you guys can hear me. I trust the audio is loud. I trust the audio is clear. Why don't you guys just drop me a thumbs up and let me know how everything is sounding this morning. So we should have a brilliant stream. We should have no bugs, brand new setup, brand new studio to take things through to the next level with every single one of you. Now, as always, guys, your likes and your feedback are much appreciated. That's what these shows are all about. So go ahead and drop just a little bit of feedback, drop and smash that like button. If you aren't already, hit that subscribe button. If you're brand new to the channel, then there is that subscribe button and the notification bell. So when we go live, you are notified that we are live and you can jump right in here with us, right? That is what it's all about. So today we're doing things a little bit differently, right? In most cases, we focus a ton on the US market, right? We focus a ton on the New York Stock Exchange. We focus a ton on the dollar. However, we are going to start to focus a little bit more on some of the earlier sessions. I can see somebody subscribed there. Zaid, welcome. Thank you for subscribing. If you get to subscribe, it's really cool. I put the sticker right over my face, so you get to pretty much do your thing. And yeah, so we are going to be focusing on alternative markets. We're going to start to look more at the Asian markets. We're going to start to focus more on the early morning markets being London. And we're going to start to diversify the different markets that we end up trading in a specific day. And these are all going to be special edition shows. And you can obviously jump in and participate with us as soon as you get those links. Now, we are going to start a little bit more planning. We're going to start over the weekends, know exactly what shows we're going to do when and how. Obviously, it requires a lot of attention to make sure that events will legitimately move the market. It's not just a fundamental data announcement that comes out of nowhere. So this morning, we're trying something a little bit different. We want to have a look at what is the impact going to be on the pound employment, unemployment data that we're going to be seeing coming out at 9 a.m. And we want to start to look and also diversify what it is that we trade. We want to have a look a little bit more at the pound. We want to have a little bit more of a look at the FTSE 100, which is essentially a UK index, just like we have the S&P 500, just like we have NASDAQ, just like we have the Dow Jones, or otherwise known as US 30. We also have the UK 100, which includes some of the top publicly listed UK based entities in the world. So we want to have a look at, do we see the same sort of impact, the same sort of volatility, and can we obviously leverage of that? Joseph has smashed that subscribe button. Welcome, Joseph, to the Globex 360 live TV family. Just a massive welcome to those of you who are joining for the very first time. Big shout out. Now, again, if you're joining for the very first time and you're not yet a part of our Telegram group, the link is down below. It should be the first or the second link. The first link is a direct message to me. If you want to ask any questions, you're more than welcome. My link is down there. And then the second link is to our official Globex 360 Telegram group. Now, please remember, only the links that I provide are official links. If you get linked into another group somewhere, somehow, please be aware you could very well be falling victim to some sort of scammer or somebody trying to impersonate Globex 360. So before we get started, just a first and foremost, important to mention, everything we're about to do is for educational purposes only, and does not constitute as financial information or financial advice in any way, shape, or form. Beautiful. Now we've got the legals out the way. Let's jump into, let's have a look at what we're looking at, what we're going to potentially look at trading this morning, right? And again, like I said, we're going to be focusing on that pound data. So let me show you guys what it is that we're looking at, and let's start and let's jump into that fundamental data linked up with the news. Let's get started. So we're going to start with the fundamental data. We want to have a look at what is going to be popping up in terms of that pound data. So let's go ahead and share and let's see where we're at. Beautiful stuff. All right. So the first thing to note is that we're obviously looking at this employment change, average earnings. Now, the average earnings generally gets the most important or high impact news events or highest importance. But I do believe obviously unemployment rate is massive. It is something that obviously drives markets. Claimant amount change for October. All of these items are going to be substantial. The only issue here is the claimant amount change claimant count change does not have a forecast, right? So it's pretty hard to weigh it up against the actual number because you don't have anything to really compare it against, right? Markets don't have any data to go, is this higher or lower than expected? I just refreshed and the data is still not there. It might be on another economic calendar. If anyone else can see this on any other sort of economic calendar, please do let me know if you can see that. And if you can, we will have a look at that. However, we are going to focus on unemployment rate. We are going to focus on average hourly earnings. And instead of just doing 2-3 weeks worth of testing, we want to do these things live, right? And this is part of the process of being a trader, is a lot of the work that you do goes in before we even hit the buy and sell button. And this is part of the research and discovery process, right? R&D for a trader is a huge part of strategy that nobody speaks about. And we often have to adapt strategies. We often have to look for new instruments, new alternatives in order to be able to trade. And I thought that instead of doing all this analysis and research and coming to with this package solution that is for some people unobtainable, I prefer to show you the raw truth, right? Sometimes we try things, we don't see value in it. Sometimes we go try things and hold it out for a week, as we did with the new show schedules for last week. But yes, we've obviously changed it up this week to something a little bit more comfortable and something we feel a lot more better with. Okay, so Sherman confirms that Forex Factory is showing a forecast of 17.3, right? So we are going to remember that. We do see different economic calendars reporting different things. I highly recommend, even if you have data, just go and reflect on another economic calendar from time to time, and that will help you with what it is that you are potentially missing on that space and that front. So we are going to move into the live trading section, and we're essentially going to start off by looking at, where are we in the market, so we can wrap up the news, wrap up those items. We can pretty much move and transition into live trading. So we're going to be utilizing the FTSE 100. We're also going to be utilizing and having a look this morning at some of the pound pairs, right, to try and see if we can see some movements here. What does the data say and what do the movements say in addition to that? So let's go ahead and open up our charts. And we're going to be starting off this morning by having a look at the GBP USD. This is going to give us the clearest cut picture on the impact on the pound, right? So just to summarize some of that fundamental data, in most of those cases, right, we are looking for specifically on unemployment rate. If we get a better than expected unemployment rate, this is going to be a good thing for the pound, and we could see a bit of a rally. If we get over expected, meaning a higher than expected number there, a 3.6, 3.7, that's obviously going to be bad for the pound. So just to give a quick summary, because I didn't cover this. So the unemployment rates are 3.6, 3.7, bad for the pound. Average earnings, right? If these items go up, that's also good for the pound, or that is good for the pound. That's obviously going up is bad for the pound. Average earnings, index plus bonus, this goes up, good for the pound. Employment change, if this goes up in terms of a positive, this is then good for the pound. And then claimant amount change, this is also going to be essentially how many people are filing for unemployment, right? The change in number of unemployed people in the UK. So if this number goes up, right, then it is going to be a bad item, right? So if there's expectation, as we saw last month, 4.2, we got a 25.5, it's a bad thing. The current expectation, as per Sherman there, was that we should be expecting a 17.3, so a lower number than what we received for the previous month. Okay, so that's one of the ones that if we see go down is good for the pound this morning. Okay, so we are about 2 minutes away, and we will essentially just going to move this to another screen as we have our let's see, as we have our MetaTrader up. I'm just moving this to the side to another screen just so I can see the numbers come out as they pop out. In essence, we're looking for if we get a good numbers here on the pound. But again, in addition to that, we're also going to start to introduce the FTSE 100, right? Also otherwise known as the UK 100. UK 100 is on this massive bull run. And even though when I quickly had a spy on past data, right, even though we don't see the same massive ripple effect that we see on other items, we do have major moments of volatility, right? Primarily, if we go and have a look at the fundamental data that came out on the 13th, right, which is a little bit strange here. I just want to see if my charts, 13th of last month, apologies. So we have a look at the 13th of October. Yeah, then we would have seen some huge fundamental data. and that is for the region of about 1,700 pips. So there is some value in looking at some of these high impact news events for these alternative currencies. So I'm looking currently at the S&P, the FTSE UK 100, and then we're also going to have a look at, let's just quickly close up the rest of these items, and we're just going to open up GBP USD this morning. Okay, so these are the two we're going to be focusing on and reading the data. Data has come through. Let's check out the data. So unemployment change, worse than expected. Earnings is better. Unemployment rate, worse than expected. Average earnings. So employment change, bad. Employment rate, higher than expected. So unemployment rising. Climate demand change, a 3.3, which is positive, even though there wasn't a previous negative, right? So let's see if this is going to fuel, right? GBP USD is building up some steam here on this value, which is again counterintuitive for what we've seen on the dollar, right? So GBP USD is starting that little bit of a breakout process, but again, it should technically be a weaker pound, right? And we should see the FTSE 100 actually benefit a little bit of this. But I do believe that the FTSE 100 or the UK 100 is also housed in the NASDAQ, the New York Stock Exchange, right? So that's going to be interesting. If I'm honest, I'm going to go ahead and I'm going to pop off a sell on GBP USD, right? For the reason being that that data to me should have continued to read negative, right? We do have this little bit of a breakout. Markets were hesitant towards this breakout point, but then we got that little bit of a push there. Things like unemployment rates, right, are extremely important to an economy. The fact that more and more people are filing for unemployment has gone up to 3.6%. Again, is generally good with the inflation fight, but earnings are still extremely high at this point in time, right? Climate demand change. I don't like that term. I'm just going to call this unemployment jobless claims. We're pretty used to that on the US dollar. We speak about the jobless claims. That's the climate demand change. I don't know. It's a tongue twister for me. So that's the general read. And I still read this as mostly negative, even though the high impact ones have come in positive. I'm still sort of reading this as negative. So we obviously need to just consider the pound at this state and time is still in this little bit of a bullish type situation. And that means that there's a little bit of weakness on the pound. If we start to see the dollar start to perform for any way, shape or form, right? And we might be in for some sort of perfect storm situation today. Looking at where the dollar index is currently sitting, this is obviously the dollar index we're currently looking at. If we start to see that the dollar index starts to have any sort of turnaround, and we might rely on that PPI data for today, if we can rely on the CPI as any sort of indication, right? Remember last week's CPI number came hugely under expectation, bad for the dollar, and we saw everything else rally and rise. The producers price index is almost that prelude to the CPI. If producers are paying more to produce the same amount of goods, that cost is ultimately passed on to the consumer, right? And there's a little bit of a domino effect there. If things cost more to produce, ultimately consumers end up paying more, and that ripple effect then hands over and obviously moves over into the CPI. However, because we saw those massively lower than expected readings on the CPI, we might see less under expectation or over expectation on the PPI. Now, generally speaking, the PPI is the lesser of the two. CPI, Consumer Price Index, has a higher weighting from a market's perspective, and we then see the PPI have a lesser weighting. Again, just as we saw with the CPI, last month's CPI was not expected by the rest of the world to be anything different. We, however, felt substantially opposite to that it could be a major news event and it could rival the NFP, which it did, right? It literally did. Today's PPI release that's going to come out for the dollar, that could have the same potential to rock. And then, depending what ends up happening there, if the pound is looking slightly weak at the start of that session, and we then get an opposite reaction, so we get a stronger dollar, or we, in worst case, get a weaker dollar, that might give us a bit of a fuel or fish to look at the pound long term in terms of what we could potentially do there. Just having a look at something else that is also pound related, we do have GBP USD. We've obviously seen some massive spikes here, and in terms of the last 5 years, definitely been range bound. But in terms of the last for this year, generally speaking, euro pound has moved towards that top side. So just looking a little bit closer at that euro pound in terms of where we're currently sitting, and there is some vulnerability here, or at least we are sitting very, very close to a support, right? So currently looking at it, the euro pound, right, is losing a little bit of value, but it's currently sitting on support at this moment in time. GBP USD is selling off ever so slightly. I've obviously taken a very, very small trade here. It's only sold off potentially from its little spike there, plus minus. Let's just go to a smaller time frame. So we've got that spike up. We've got a little bit of a sell-off on the total of that spike, a pullback around about 10 pips, which from a Forex trading perspective is around about 100 pips on indices, right? But we do need to consider the fact that we've got this little bit of a bull momentum here. In addition to the bull momentum, we've got a little bit of a, like markets have done a little bit of a bull extension, and that was just prior to the data release. 5 minutes prior, we got that little bull extension to the top side, and that little overextension of the market is in most cases one of two items. First item being the market knew the data before it came out. The market predicted that the data would be positive, right? That's the first case scenario. The second case scenario is when we get these bull extensions or bear extensions. So in a bear market, right, where we get an extension outside of market structure. So let's say that's the market there. Markets are trending higher, lower, or lower highs, lower lows. And we get a little extension to the downside. Often, right, that is just an extension to take out everybody that's trading that range, right? So it's important to obviously consider this is a positive sign. An extension outside of an already bull market is what I look at as a condition for a potential false move, or alternatively a bull trap. And if we then start to see markets break back in this market structure, then that's going to be a hugely positive thing. So what I would do, if I wasn't already in a position here, and obviously I just want to maybe manage my risk here, I don't necessarily want to drag it to entry, but I will on this particular setup here. Let's just put I'm just putting my stop loss at entry, even though it's not a big trade. It's 4 pips, 5 pips, whatever the case may be. We're looking at a very close time frame. Should we break past this overextension, it would be then a case and cause. I'm just putting up some alerts there to then further that short position towards that downside. Markets definitely seem to be a little bit, obviously we got a mixed result, right? We didn't get a clear cut buy or sell here. And we didn't get that labor productivity, which I would have liked to have seen come in prior to this session already having happened. Let's see. Okay, so labor production, labor productivity, if I remember, the item was removed from the roll. It might still be on another calendar. If you guys can please have a look at it. So Chris H, yeah, there's very little effect on indices from a US perspective, right? Because obviously the pound is only part and parcel of the top 3 trading currencies, right? If we look at the order of magnitude of what currencies move the market the most, we have the dollar sitting in quite a bit of domination there. We then have the euro, we then have the pound, we then have the yen. So the pound is sitting 3 tiers down in terms of total traded volume or total exchanged volume. So when it's not top 1 or 2, the effects that it has is usually isolated to its territory. When you look at something like the dollar, which 90% of the world's transactions happen in, those ripple effects are massive and across almost every other currency across the board. So there's a substantially greater impact there across the board. So yeah, not a lot of movement, but again, we're going to start to take advantage of these sessions to try and see, can we get bigger trades involved, even from a swing trade perspective. That's going to be the ultimate goal there. So I see I got a little push up. I obviously moved my stop loss to entry with a very, very small trade. And ideally, we just want to monitor this current position to see that when the rest of the world starts to wake up and come online, what movements do we end up getting there? Specifically on the UK 100, we aren't getting all too much movement either. And this is something we need to go back and study and have a look at and try and understand, where do we get the most drive and the most momentum? Specifically on the UK 100, if we go back and have a look at the 3rd of this month, right, we got a major bull rally, right? It's still slightly less geared than something like NASDAQ, still slightly less geared than something like the US 30, but it's going to be important to then go back and have a look at, those comparative items here. So what I'd like to do then to just have a look at that is I want to just keep this UK 100 open here, and I just want to open up US 30. Okay, I want to put them on the same time frame, and both those time frames are going to be 15 minutes. And I simply want to just go back and have a look at that 3rd of this month, right? So there we see that UK 100 rally, and I just want to have a look at what ended up happening on the 3rd and just see if we're getting that straightforward correlation that we're currently seeing. If we're getting the same amounts of impact on the US 30. Okay, so it seems to be that move over there that we got that massive spike down. If I'm not mistaken, I do believe this was NFP, and I could be mistaken. I might be under correction here, but I do believe this was NFP for November. I'm just going to quickly check that out. I don't know if you guys can confirm for me, but I do believe this might have been NFP for November's NFP, the first Friday of November for the previous month. I'll go back and have a look. No. NFP only happened on the 4th. NFP Friday was on the 4th of November. That's strange. I wonder what happened on the 3rd then. Can anybody see what happened on the 3rd? Yeah, the previous unemployment rate change or number wasn't huge, I remember, for the previous month. I'm going to go back and just have a look at what happened on the 3rd. But yeah, that rally certainly constitutes some sort of correlation between these two. Wasn't the 2nd the federal our Fed interest rate? Okay. Here's our Fed interest rate decision on the 2nd. Okay, there we go. Okay, that makes a lot more sense. Okay, so the Fed interest rate decision had a pretty big impact. Right, currently sitting on UK 100 on my left, just above here. We can see that movement down, that pullback. Federal interest rate was only 1,000 pips, that total move. Right, so if we look at the US 30, that was 10,000 pips. Right, so much lower gear than traditional US 30 Nasdaq. Which I think is what a lot of people are potentially looking for in this state and moment. So we should be seeing something like that. Yeah. Okay, so very similar market structure. So it might appear that this has very little effect on the US 30, and we have more of a knock-on effect currently sitting. So there's our NFP buy, I think it was. Let's have a look here. There's our NFP buy from this month, and we can see that massive spike. There's NFP on the FTSE 100 or the UK 100. Right, 1,300 points, 1,300 pips versus 10,000 pips plus. So definitely a knock-on effect. What I'm trying to see is I'm trying to find a move that the UK 100 had that the Nasdaq or the US 30 did not have, right? To try and determine where is the value proposition here and how can we take full advantage of this market. Let's quickly have a look at where our because GBP's got this little bit of steam here. I just want to quickly have a look, and I just want to add in an RSI, right? Standard settings. I just want to have a look. Is the RSI giving us any indication? Yeah. Oh yes, look, it could be CPI. Could very well be CPI. CPI was from last week. Yeah, it could very well be. Yeah, so GBP's got a little bit of strength in this level, and obviously this channel I've drawn here is obviously subject to change. Let's just have a look here quickly. Is there anything bigger acting as dynamic support / resistance? Let's quickly have a look here. We don't have a lot in this area that can really... Oh, okay. I didn't see that. There we go. Okay, so we got a really good base of support just sitting slightly below GBP USD. Just want to have a look here. Yeah, GBP USD and is pretty much in a fight for its life at this point. GBP USD is obviously outperforming that jump through on that spike on that CPI, that weaker dollar. So GBP USD is really running off that weaker dollar value, and it seems like, if anything, right, the dollar is going to be the main driving factor here this morning. This is currently looking at the dollar index. We're seeing that the dollar's losing value, even though the pound, right, has had, in my opinion, some bad fundamental data. It seems that the driving factor here is currently more than anything else, is currently still seeing and sitting as the dollar, right? Since that release, the dollar has moved down from 106.62 to 106.57, right? Even further, but it's obviously pulled back up. So again, the power of the dollar is, overwhelming here. And even though the pound's unemployment's gone up, there's more and more people that have filed for unemployment. It's potentially going to be, let's have a look here. Also, something interesting I'm just seeing here from a trend perspective, even though it's only on a 5-minute perspective or 5-minute time frame, I'm just seeing this level here that's cutting through the dollar index that might be worthwhile just taking note of, right? We seem to be finding a little bit of support at that level. And it'd be interesting to see, do we start to deal or do any sort of substantial retracement? I just want to go back in time really quickly. I know we have to go quite far back in time to figure out where we are. I mean, there's quite a lot happening in this area. Let's just draw this area out. I just want to confirm something for you guys quickly. Yeah, the difficulty, the dollar index just hasn't been in this territory all too often. We've got one, bull impulse through this area and pretty much nothing else to really give us any sort of dynamic support to look at where that dollar is going. I don't think this would suffice as a decent enough support at this point in time. The fear of the dollar right now is still very, very real. Obviously, we've got the issues with FTX, with issues with crypto. These are all within dollar domains, right? We've had billions, if not trillions, wiped out of the market with this FTX liquidity issue. And so this could have a greater impact than what we currently feel. And even though they're not really immediately connected, can have a pretty big effect there. So I think, this may be very well support, but I don't think strong enough right now for what is happening on the dollar. We're still making, those lower lows. We're making those higher lows. And, again, we might be in a situation where there's an attempt to form some sort of symmetrical triangle formation. That would need to go all the way to the apex. So we could see the dollar pick up a little bit of value as we wind up into that apex area, and then a decision made, a break up, break down. But again, I'm still holding my Euro USD longs, right, since last week as part of that CPI event. Euro USD is potentially sitting at resistance here. But I don't see much of the markets really caring much about what's happened to the pound. We're seeing the UK 100 start to rise, which should start to show us that little bit of weakness on the pound, on GBP USD. But GBP USD is also making a bit of a rise. So I don't think they're as connected as we've seen the dollar and the US stock markets. I don't think they're as connected. Let's just get into a little closer of a time frame here. So we're getting a build up here, but the build up starting to look a bit thin. Right, we're starting to see some big wicks, some indecision here. And if you look very, very carefully, you're going to start to see a little bit of a symmetrical triangle. You can see it on a 5-minute, just looking at the wicks. And look at those wicks. Look at these wicks. So you're going to get a little bit of a symmetrical triangle here as markets try to, decide what is going to be this next state that they want to go through. Okay, so it is bullish. Somehow the pound has turned some negative data into positive data, and GBPUSD could very well be a continuation of a little bit of a buy here. We're getting a little bit of a spike through on this triangle, and let's see if that continues. If it does, GBPUSD might be a long buyer. Nasdaq looking to break to the top side. Yeah, it's seeming the dollar weakness. If we just monitor and spy on this dollar index, we can see this dollar index has just broken support here, right? To me, the dollar has the potential to continue, specifically going through, support support 1, support 2. As soon as we get through this support level here, just about where we've broken out, there's nothing really holding up the dollar at this point, right? The dollar's in free fall. So I think it very well could be a situation for a long-term position on GBPUSD for something like a buy. And then considering, that the Nasdaq, that US 30 is making those moves to the top side, we may need to consider some of those buy moves there. Okay, so I'm going to hold one. Let me make this a little bit slightly larger here. If I can get a little bit deeper, that would be ideal too. I'm just going to put this below the structure here. So the only thing you will notice when it comes to currency, right, even if you place a stop loss of 10, 12 pips, whatever case may be, obviously it's a very small stop loss because you are dealing on a 1-minute time frame. It will read anything close to that stop loss. It will highlight your position as red, right? So just looking at that, it will highlight that position as red, just so you don't panic there. It's not, again, if you are trading on the smaller timelines, you are scalping some of those moves, it's not the end of the world. The only difference here would be the gearing. So example, where we would use, 2,000-3,000 points on a trailing, every 10 points is 1 pip, right? At the moment, this total stop loss here, right? Total stop loss is only 10 pips, right? So again, there we go, getting a nice push on that buy. So, we might want to consider here, I don't know, like maybe 10 pips as a trailing. Obviously, it's very small. So that would represent 100 points. So maybe we'll engage that with 100 points. And then let's see here. I'm just going to use 100 points for both of them. If it changes and we start to make a much bigger move, then I'll obviously like to consider, adjusting and potentially being in a position where we can allow this to be a swing trade. Cool, let's give this thing a few seconds and just see how it plays out. Okay, so she seems to be pushing quite nicely. It seems we are then, ladies and gentlemen, looking at some profits. So good stuff. We see some money falling there, and we are in it. Again, this could be a swing trade, so we want to try and hold it. Obviously, it's not big pip counts because obviously we're dealing with Forex, and we don't tend to see as big of a pip move just because of the nature of Forex, right? The gearing and how it obviously all works. So yeah, we're obviously going to just allow this one to continue to run, but from a basic perspective, we are in the money. And even though it is a pound related trade, let's get Trump in the picture and see what he has to say about it. Again, I'd be pretty excited and stoked to see him come back into the picture and see what we could end up seeing from him long term and what he will potentially end up doing in office. Let's just quickly give a look. USDs are still falling, not finding anything close to a support here. Again, I do believe that 61.8 could offer our very next sign of relief. And that's again sitting at that 16, let's see, 16 Rand 98 and a couple pips, right? So USDs are still pretty long distance. I think the USDs are banner here might actually be the actual support, right? Which is plus minus right over there. So USDs are nothing much to really write home about as yet. Euro USD, we shouldn't see much of an impact. Euro USD is obviously purely just being taking advantage of that dollar weakness. The GBP USD should see quite a substantial move. We should see the dollar index continue. Oh, there we go. So dollar index continued to break support, fell through the floor, and as I said, there's nothing left really holding up the dollar once that ended up happening, right? Dollar index just completely fell through the floor there, and that means we could then continue to see some bull movements on both the UK 100, the US 30, as well as Nasdaq, right? Nasdaq should be performing well. I did see a comment saying Nasdaq is essentially pushing. One is in a sell on GBP/JPY. Beautiful stuff. GBP/JPY. Okay, so the pound is actually losing steam, right? If GBP/JPY is in that sell side move, it means that, you know, the pound is losing value against the yen. In this particular case, because it's obviously fully dollar dominated in terms of the loss in the dollar value, right? We're seeing things like USDZAR fall, things like GBP/USD rise, and that's obviously going to be the big question: is how long can we continue to see these bull moves on the rest of these currencies that are obviously taking advantage of this dollar weakness? Just quickly having a look closer in on US 30. Let's just quickly have a look here. So we are getting, and we're going to start to see this more often. We're going to start to see some 8 AM breaks that I've started to notice, and this is going to form part of dollar domination, is these 8 AM breaks, right? We have a little bit of market structure, things are trending ever so well, and then we get these little sharp moves here. And this also started to happen at that 9 o'clock mark. I just really want to scan the markets because this definitely seems like an external news event. The way the markets have moved here definitely seems like there's something in the headlines that could be really hurting the dollars right now. Let's see. Outside of the Amazon layoffs, I mean, Amazon announced and Jeff Bezos announced, but that was quite a while ago, that they're laying off 10,000 workers across the board. So that's pretty normal. I don't see any difference there. I don't see anything. If you guys see anything, please do let me know. Let's just see here, 147 EST to GMT plus 2. I just want to see how long ago this came out. Okay, so it seems that FTX finally filed in for unemployment. Yeah. Yeah, the stream should be super smooth. So I've got a stream health buffer sitting on my left. I'm watching the same stream you guys are. Which means double the probability of seeing something that goes wrong, and it obviously just checks latency. We're currently running at 2.4, 2.3 seconds. Also, what you can do if you're watching on a laptop, right? Right click on the stream itself. So let me open up a different stream just so I don't break it. Every time I show my stream on stream, I end up breaking the stream. If you're watching a live broadcast, you can right click on it with your mouse and go to stats for nerds. Stats for nerds. That'll tell you your stream health, delay, your connection speed, your buffer time, and that will show you pretty much everything. Yeah, and I'm also obviously watching at 1080p, so I'm watching at the full resolution just to double check and make sure I'm not missing anything out there. Okay, so I don't see anything else really happening that is substantial here. GBPUSD, a little bit of a range there. USDZAR continuing that extension, that fall. EURUSD is probably in it for the win here. I think EURUSD is potentially making the biggest moves this morning, and not from an expected source, right? This isn't an expected source here. EURUSD is up by 36 pips, and that is just on dollar weakness alone. And I think the reason why GBPUSD is hanging is that negative pound data I perceived as negative. Obviously, the worse dollar data is performing better here, right? So it would have been, I can't tell what is the reason for, what external news event has happened here, but the dollar is absolutely sinking into the floor. So we may want to consider having a look at some US 100 positions here. Just looking at a 1 minute time frame, we may want to consider that. Gold should be performing extremely well this morning. Looking at that bad dollar, there's gold doing its thing. So gold officially in that little bit of a breakout channel, breakout zone. There's no clear-cut resistance / support. I think potentially the markets have used that level as the breakout. It's the only thing I can see that would have been logical. Let's have a look. Yeah. So gold is up around about 50, 60 pips. GBPUSD is up, let's just see from the time of our trade, plus minus 20 pips with an absolute high of about 26 pips. So nothing substantial there. I'm just going to increase this trailing stop because I think GBPUSD is going to be a little bit choppy. So I'm going to extend from 100 points, which is 10 pips, to potentially, let's just see here. Meant to make that 200 points, not 2,000. So 200 points, which is a 20 pip trailing stop. That's currently where I'm going to sit this morning. Other than that, I don't think there's much else. Obviously, you want to do some digging because someone is absolutely hammering the dollar right now. So I'm going to do some digging into what that could end up being. And we will then get back to you guys in terms of what that all means. But yeah, something is absolutely destroying the dollar this morning, right? So again, in line with that CPI data event, aligned with the Fed interest rate decision, aligns with pretty much all the things we've looked at up until now. And it seems that the dollar is currently being hunted. It's probably the most hunted currency of the week and will continue. Remember, with the CPI data event, we explained that what ends up happening there will be a trend for the next 2 weeks, could set the tone and the balance for the next quarter, right? So if you are long on anything that is dollar quote, so Euro USD, XA USD, US 30 USD, anything with the dollar is the quote, that is the long-term trend. That is going to be an investment position over the next days and or weeks. If you're not in that, we are going to look towards this afternoon's data. If you have a $100 plus account, we have the PPI Producers Price Index data that could give us an additional opportunity. If it aligns with the dollar's direction, meaning that dollar weakness, in other words, comes in below expectation, will give us alternative entries to essentially continue some of those long positions, Euro USD, looking at gold, looking at indices in terms of US 30, NASDAQ, as well as even potentially UK 100, as we've just seen. So we are going to try and get back into some of those entries and try and continue some of those long positions that we've been so fruitful in over the past little bit. Outside of that, guys, this is wrapping up our quick session together. We are going to be preparing. I'm going to be live again in 10 minutes for the Pounds for Breakfast session that is coming up. We will cover a little bit more of the news. Hopefully we can uncover what exactly has happened there. And as we see that London market open, we want to see what is that reaction going to be on the pound as we see a little bit more movement there coming in at 10 o'clock sharp. We're also going to look for opportunities at 10 o'clock on the US 30 as well as the NASDAQ. So stay tuned and stick around. I'll see you guys in the other link, which is the public link That is going to be Pounds for Breakfast. That is starting in the next 10 minutes at 9:45. We are going to continue to do these fundamental events as special events and continue our show broadcast to obviously do London session, to do the New York Stock Exchange. Just remember, if you have your $100 or more account, we will be sending out an email this morning that will be giving you the link to that PPI session as well as to the New York Stock Exchange Open, right? Those links will also, depending how fast the team develops that extra tab, will also be available for you in your client area. So outside of that, guys, I will see you guys in a little bit. Thank you for joining me. And as always, trade safe, and I'll see you guys a little bit later. As always, do things the Globex 360 way. Goodbye.